Welcome to YES Securities, where we don't just secure investments, we secure your future. In the ever-changing landscape of finance, one thing remains constant: the need for a reliable partner. At YES Securities, we are not just wealth managers. We are architects of financial success. Our experience over the last decade has been a steady and remarkable journey leading to growth in the labyrinth of financial opportunities. We don't just find a way, we create it. We don't build walls, we build bridges that connect ambitions to achievements. Innovation is not just a word for us, it's the heartbeat of every decision we make. Your success isn't just a goal, it's our mission, our commitment to your financial journey. We provide world class solutions across multiple products, catering to institutions, high net individuals, and retail investors across sectors. Because your success is our business. Yes, Securities, empowering tomorrow.
Right, welcome everyone. Right, let's get started to today's session with our Finpulse webinar, right? So welcome to our new session of YES Finpulse, our webinar series dedicated to exploring the technical aspects and broader discussions in finance. Our mission at YES Securities is to make finance accessible to everyone, regardless of background or experience. Over the past decade, we've evolved from a transactional broker to a trusted advisor for both retail and institutional clients. Now, let's get down to business. Our topic for today, decoding the IT sector. It is my pleasure to introduce our esteemed speaker for today, Mr. Varun Thakkar. Varun is a Senior Equity Research Analyst for Premium Research Services at YES Securities India Limited. With a Master of Science in Finance from IES School of Management, Paris, and over 6 years of experience in Indian capital markets, he specializes in covering sectors including IT services, automotive, auto ancillaries, and defense. Today, Varun will share his deep insights based off his extensive research and knowledge on the IT sector. And guess what? If you miss any of our sessions or want to revisit the valuable insights shared, don't worry. We'll be uploading the entire series to YouTube under playlist named YES Finpulse, so you can catch up at your convenience. Remember, this isn't just a one-way street. We want to hear from you. After Varun's presentation, don't hesitate to ask questions and share your doubts in the comment section. Your engagement is what makes this series truly special. We have polls and quizzes coming throughout the webinar, so be alert. Over to you, Varun.
Hello, everyone. So today, what we are going to be doing is covering the basics of the Indian IT sector, what the IT sector is in India, what are the different business segments, what are the changing business models that we are getting to witness in the IT service sector, and how and what are going to be the new growth drivers for this industry. And we will also be briefly looking at the key KPIs we can look at while fundamentally researching or studying about an IT company. So to begin with, let me give you a brief about the Indian IT service industry as a whole. So the Indian IT service industry is contributes about 8 to 9% to the overall India's GDP, and this figure has been around 6 to 8% historically for the last 5 years. And this number is expected to reach about 10% of the Indian GDP by 2025-2026, given the rapid digital transformation we are seeing across the world and how Indian IT services are benefiting and driving the growth there. So Indian IT service as a sector is a $250 billion revenue generating market in India. And it contributes to about 12 to 13% weightage to the Nifty 50 index and is the second largest component of the Indian economy. Coming to the key players in the IT industry, we have large cap players like Infosys, TCS, Wipro, Tech Mahindra, and LTI Mindtree, which make up the top five large cap IT companies. And then we have other mid cap companies which are just growing and coming up, who are doing specialization in ER&D and cloud computing. Coming to the difference between the large caps and the mid caps, while the large caps contribute to about $82 billion as a consolidated revenue, and they make up about $373 billion in market cap in the Indian stock market. While on the other hand, the mid cap IT segment, being too fragmented, just has a revenue pot of about $7 billion, but has a market cap of about $40 billion. So what we see here is Indian IT sector contributes richly to the economy, but it's the top five players which are consistent in giving these returns and giving these numbers. Coming to the business segments, what are the basic bread and butter of every Indian IT company? So there are about four main business segments that every Indian IT company has. One is your IT services, which is your core, and it involves a wide range of services like providing software development, application maintenance, IT consulting, infrastructure management. The best example I can give you about companies which are doing this globally are your top two, three companies, TCS, Infosys, HCL. The other business segment that they have is the business process management. This has been nothing but outsourcing that big corporates do to smaller companies while they focus on their core activities. So some examples here are like companies try to outsource their HR, their financing, their accounting, etc. So these businesses also make up bread and butter for the Indian IT industry. So here we have several unlisted players who are very well versed and expert at these business process management. Some examples I can give you is Genpact and WNS Global Services. These are unlisted entities, but they have a wide coverage in this area. The third business segment that each IT company is focusing on and is actually evolving in the trend is product development and product engineering. So in this business segment, what the company is trying to do is they're trying to create their own software products, trying to develop those software products for the company and deploying it for their clients. Some example I can give you in IT product development experts are going to be Zoho, because they have a whole application tool which each and every organization uses, whether it be for HR purposes, whether it be for meeting purposes, etc. Other example I can give is an up and coming company called Freshworks, who is really an expert at IT product development. Coming to the engineering, product engineering and ER&D side of it. So these companies collaborate. This is more likely a B2B business where companies collaborate with, let's say, an auto company or let's say a product company, and they engineer the entire product for them, develop new softwares on how it can be a value add for these companies. For example, right now we are seeing in auto, there has been a lot of technological advancement that has come in. Like you can start your car with your phone, you can check engine levels, check fuel levels, etc. So all these kind of products and developments are being done in the auto sector, and the companies which are really pioneering here are Tata Elxsi and Tata Technologies. You also have players like Persistent and KPIT, which have benefited from this boom in the auto segment. And last but not the least are the digital transformation services that these IT companies provide. So what do we exactly mean by digital transformation is, post-COVID, there were several activities which had to be, digitalized, and it really brought in a score where every company was trying to transfer that data from keeping it in a manual data server, etc., to moving it to a cloud entirely. And cloud computing, as we all know, currently is in trend, and each and every organization is looking and working towards, enhancing their cloud capabilities, offering those to the clients because that's the need of the hour. So companies that are really pioneering in digital transformation services are your companies, global giants like Accenture. You have HCL Tech, which has performed significantly in digital transformation services and giving digital products as an offering. So this was a brief about the business segments of the IT sector. Coming to the business model, how every IT company works and what advantage Indian IT company had. So the first and foremost advantage that you have for Indian IT services and the boom that has come in was the low cost labor model, which was a competitive advantage for Indian companies and which has helped to create giants like TCS and Infosys, which are now competing with your global giants like Accenture and Cognizant in providing these low cost labor models where they give the same set of services but at a 30 to 40% lower billing rate. So, on an average, historically, the billing rate for Indian IT services has been around 56,000 to 66,000 per month from these customers of theirs. While on the other hand, Accenture charges about 90,000 to 100,000 per project for the same services. So that was the competitive advantage Indian IT companies have got themselves, and because of that, they are trying to win more deals, etc. And that has really driven the growth in the last decade or two. But this low cost labor model was very preferred for application development, for maintenance, etc. But with a changing environment and rapidly digitization in the economy, we have seen that companies that have adapted to this change and have changed their business models have actually performed really well and have come out very strong. Uh, Let me give you some example of what are these new and upcoming business models that are coming in and how they are helping these IT companies. So coming to the first thing is from a low cost labor model, we are switching to a high value added service model, which usually includes designing of the application, consulting on how to drive the digital change in a company, etc. It's one of the most up and coming business model in the IT industry. So key defining characteristic of this new leading model is going to be like delivering services like infrastructure management, server management, data centers, cloud computing, etc. So what this business model does is you enable yourselves to get into larger ticket size deals, about 100 million plus, 200 million plus deals, and you get an entire enterprise solution going on for a client. And this will not only increases your relationship, but this also gets you the other work, which will be your maintenance, etc., which can be a bread and butter later. The second business model that has come in and is really helping your mid-cap IT segments is the industry focus and specialization. So what we usually see in large cap IT services is that they cater to all segments, rather it be BFSI, whether it be manufacturing, will it be auto, will it be IT services, etc. They are spread across all the verticals. So what this does is it does give them a diversification in their business, but it's a situation of where you're jack of all trades but master of none. So what has happened, this is gradually shifting and we are seeing new IT companies coming in with deep capabilities in a certain sector and they are trying to be subject matter experts in one sector. Let me give you an example. Like in the auto sector, we have KPIT and Tata Tech and Tech Mahindra coming in with, using AI as a service in your cars, giving e-cockpits where you can monitor everything in your car digitally, and with electrification coming in, these new age features that we are getting in your cars are nothing but driven by this industry expert IT companies which are developing these products. So what we have seen in the last few quarters is that even though Indian IT is not doing well, it's in a down cycle. These companies, which are basically focusing on ER&D and are focused on driving automation in a certain sector, have really done well and have really outperformed their large cap peers as a whole. Coming to the third up and coming business model is that companies are focusing on developing cloud capabilities and data centers. So what's happening here is cloud computing, as we all know, has been a major driver for business for these IT companies. And now we are seeing new age companies like NetWeb coming in, Blackbox coming in, who are focusing on data center development, who are focusing on creating a data center infrastructure, which is going to be driven by these IT companies. So, according to me, these three new business models are going to be the key differentiator for each and every IT company which is looking to perform and give shareholder returns. So we have covered business models, we have covered business segments. Now coming to the business cycle of IT. Uh, IT, as any other sector, has product life cycles, business life cycles, etc. So we have seen currently we are in a macro related down cycle, which has been caused by high interest rates prevailing in the US market and the European markets, which have been the main customer for Indian IT companies. But this is not the only down cycle we have seen in the last few years. Let's rewind it back almost 15 years ago when we had the global financial crisis. At that point, since IT companies were majorly, catering to the BFSI sector in America, and that was the main sector that was hit by the global financial crisis. We did see revenue growth slowing down. We saw valuation derating happening in that GFC crisis period, which was anywhere about 2009 to 10, which was a lull phase. But even then, we saw a V-shaped recovery happening in the market, as in when the environment came down, and it was really important for the businesses to keep going. So IT was not so much harmed; it was more or less a knee-jerk reaction. Coming to the second down cycle, which we also recently, which was a global down cycle, which was your COVID down cycle between 2019 and 20, where we saw businesses shutting down for a while all over the world, and obviously this affected the IT companies. Again, people had doubts that will IT ever come back, etc. But what we saw after that was an unprecedented rise in actual need of these IT services, and what of businesses wanting to digitally transform themselves. So what we actually saw post COVID-19 was also the same kind of a V-shaped recovery happening in the market, because the need for digitization, the need for IT capabilities with companies increased rapidly, and that was another example where we saw IT sector giving a V-shaped recovery. Coming to the current cycle, however, current cycle hasn't been caused by some global crisis or any kind of an external outlier event. Current crisis has been more or less a macro call, where you are seeing high interest rates in US, which has led to nothing but the discretionary spending power of companies coming down. What this has led is, like, companies are cutting down on spending on IT and upgrading their services, and are looking at small cost takeout deals, where they have contracts for not like a longer period of 10 years, but short term contracts of 1 year, 2 year, and project based kind of a how do you say, business coming in for these IT companies. So what we currently are seeing is that the recovery from this lull phase is, however, going to not be like a V-shaped recovery we have seen in other down cycles, but it's going to be a long, elongated one, where the macro environment will really have to favor the IT companies. So to conclude, I would say that to conclude the segment, what I would like to say is that IT for us right now has become a macro call. We will only go overweight on IT when we see the macro environment, improving in the US, And more or less that's happening. We have seen the interest rate stabilizing in the last few quarters. We haven't seen any more interest rate gains, but we have actually seen interest rate cuts trying to come in. Okay. Other than that, what we are also seeing is that the growth will more or likely come back in FY25 end or by FY26 when we see the TCV or the deal booking coming back into the picture. Uh, so what we are trying to see is that it is IT sector as a whole is going to grow in low single digits of 1 to 3%, and this is reflected in the guidelines, the revenue guidance and guidelines that every large cap company has given. Coming to the growth expectations, we expect about 4 to 6% growth coming into the IT earnings going ahead. So that covers the business model part of it. Now, I would like to come into the fundamentals of this sector and what are the key KPIs we look at on evaluating the performance of the IT sector. So what are basically KPIs? KPIs are nothing but the key performance indicators we see on how a company is performing and how is it differentiated from the other company. So coming to the first kind of key KPIs, we come to financial KPIs. Financial KPIs include more or less your revenue growth, your business segment splits, how each business segment is performing, what are the profit margins of each business segment, what are the order booking stats, what are the order book split for a company, what is the ROE, what are the return ratios, what are the net cash generation ratios. To give an example, your top 5 companies basically operate in 7 main sectors, which are BFSI, telecom, high tech, manufacturing, logistics, health, energy. And more or less, we have seen that all these large cap IT companies are majorly focused on BFSI segment with only a few capabilities on the other end. While on the other hand, we see that the mid-cap IT are coming in and developing a niche segment for them. Like for example, you have players like Persistent and Emphasis, which have come into high-tech IT services where they are developing AI models, they are developing machine learning models, etc. On the other hand, you have KPIT, who is doing great on the auto side of it. What we also look at when we look at KPIs and understanding the performance is the revenue growth. But sometimes we do have a question on why we look at constant currency growth and why we don't look at INR growth. Well, the basic factor here is that we look at it on a constant currency basis because the IT companies in India bill the clients in USD but recognize revenue in INR, and this brings in the factor of foreign exchange gains or foreign currency fluctuations, etc. So to take out this foreign currency, fluctuations and looking at the real growth rate, that is why we look at it in USD terms, and I can actually see what the company has grown. Let's say a company can grow by 7%, but your dollar has appreciated by 3%. So in the Indian segment, we look at it a 10% growth rather than a 7% growth. So to take out this discrepancy is why we look at revenue growth on a CC terms. What other thing we look at is how the demand environment is factored into these KPIs is that we look at the order books or what are the total contract value that they are signing. So currently, as we can see, as of end of FY24, large cap IT segments were sitting at a total TCV order book of about $230 billion. That's just the order book of your top 6 IT companies. While if I look at the total order book of the mid cap IT services, it's somewhere about $17 billion combined. So here also we can see that obviously the preferences are given to companies which are, covering a holistic amount of business segments, but we are trying to, but we are also seeing specialization, companies with specialization in certain segment performing better. And in our in our opinion, going ahead, only those companies will perform in the Indian IT sector where they can carve their niche and they can go for billion-dollar deals rather than smaller deals that are going on in the sector. Other than this, the last part is the operational KPIs that we look at. So why is it necessary to look at operational KPIs? Is that we get to see what are the productivity levels of the company, how much is the hiring going on, what are the per employee statistics for the company, and how the company is really doing well in terms of the productivity. So for that, we look at KPIs like revenue per employee. We look at how much profitability per employee is being generated. We also look at attrition rate of how many people are leaving the company. We look at hiring statistics. This just gives us an idea of, is the business really going good in the particular company, or is it or is it just that the company is very stagnant and is doing the same job, and that's why the growth is not coming in. And there are other two factors of KPIs as well, which are like IT specific KPIs, which include system uptime, cybersecurity incidents, IT delivery cost. And these KPIs, you can't calculate, neither can you find out. The only way you can do these KPIs is when you meet the management, when you interact with the management, when you know the company in and out. So it really takes a lot of effort from our side as well to get into know these company specific KPIs on how the delivery costs are managed, how their incidents or how the risks are mitigated, etc. And there are also external sources one can use to get customer level KPIs on how the customer actually feels about these IT companies. The companies will always say, give good testimonials from the customers, but what if you really want to know what's going on with them, what are the net promoter score, what are the customer satisfaction, you have reports like Gartner which come out with macro level, industry level reports, which can give you a lot of information on the sector as a whole, and also how the clients actually feel by the technological advancement they are getting. I think more or less that was a brief about the entire sector, or how do we break down in pieces. Just last part which I would like to just give in like 5 points is that the trends which one can look at in the IT sector before making an investment. The recent trends which are driving growth in the sector are obviously AI coming in, and all the large cap companies are investing a lot on AI capabilities, retraining their employees. Because what we, in our opinion, see is that the introduction of AI is nothing but a start of a new super cycle for the IT industry in India. Because we do enjoy the low cost based capabilities, cybersecurity incidents are increasing, and a company has to really preserve its data. That's going to be a big trend there. We are also looking at cloud computing being a new trend, and 5G and Internet of Things. So these are the 5 points which I am really excited about to look at in the IT sector and how it shapes up going ahead. I think that is all from my side for now. We can surely dig deeper into this later if we have the time. But for now, I think the fundamentals are more or less covered by me. So if anyone has any questions, I'll be happy to answer. And thank you, Nikita.
Thank you so much, Varun, for such an enlightening session. Do we have any questions for Varun today? So to conclude, let's apply this newfound understanding to make informed financial decisions. To all attendees, thank you for joining us. Let's continue this journey together. Stay informed, stay inspired, and stay empowered. Keep an eye out for our next informative webinar. Until then, stay connected with us for more updates. Thank you once again for being part of YES Finpulse. Thank you so much, Varun.